Thanks for having me on, Elijah.
All right, well, I'd first like to discuss your current plans for First Mining Finance. Your company was founded 2 years ago, and you were first basically focusing on acquiring different assets, but now you're going more into the investing mode. Can you talk a little bit about your current plans for First Mining Finance?
Sure, absolutely. Yeah, as you said before, we started this company 2 years ago with the explicit goal of going out and acquiring, high quality yet highly undervalued mineral assets. And we went through a very severe bear market with respect to mining equities, specifically, gold and base metals. In a period of just over a year, we've done 8 transactions and added 12 assets to our portfolio, with our last 2 transactions occurring last June. Since that time, we've seen, what appears to be a new gold cycle emerged, and we've seen, the valuations of gold equities move up, and we've seen liquidity come back and capital come back. So it's been much more difficult to do deals. We're not seeing, junior mining companies that are on the ropes and are in significant financial duress. So we've decided to kind of, ourselves maybe, take a little bit of a change in course. And, we've budgeted, we approved a $20 million budget for 2017, which will include drilling, resource estimates, economic studies, and other activities to enhance our assets and add value. We're for the whole year of 2017, we're going to carry out 50,000 meters of drilling. Specifically, 27,000 of those meters will be at our Goldland project, which currently has a resource there. It currently hosts over. I'm just looking at it here. Goldland, it currently hosts over 500,000 ounces measured indicated and 1.8 million ounces of inferred. And the goal is to do this infill drilling so as to convert these inferred resources into indicated, and also carry out a new resource estimate. And assuming that the resource estimate is positive, then we'll go ahead with an economic study. We'll also be doing work at our Cameron project, down also in Northern Ontario. Cameron, we currently have, approximately, 600,000 ounces of measured indicated and 900,000 ounces of inferred. So we're probably going to do around 9,000 meters of drilling there. Our Hope Brook project, Newfoundland, which has, almost 900,000 ounces in indicated and 100,000 ounces inferred. So, we'll do about 5,000 meters of drilling there. So, given that we're still not seeing many opportunities anymore, we feel it's an appropriate time to put money back into the ground and unlock value.
Now, I was wondering if you could expand on how, when First Mining Finance started, you were saying how basically the gold mining sector, the stocks were basically in such a bear market. It was the most bearish it's been in 20 years. So how did that help Gold Mining Finance acquire a lot of assets very quickly?
Yeah, I mean, we were seeing, it was one of the worst markets I'd ever seen. And, our chairman was instrumental. He's the one that put this all together. He's a gentleman named Keith Newmeyer, and some of your audience have probably heard of him. He started a company called First Majestic Silver from nothing. I think it was 2003 when we were in a previous bear market. In a very short period of time, he acquired 3 silver assets in Mexico and quickly moved them into production. And now he has 6 operating mines producing about 18 million ounces of silver equivalent. And now they're the second largest silver producer in the world. Keith also founded another company called First Quantum Minerals. And First Quantum, he founded that in the early 1990s. And now, it's one of the largest copper producers in the world. So, we've seen this happen before where, Keith's always been able to identify bear markets, and he's always been able to take advantage of the timing. And that's what we did again with this company where, between, 2012 to 2016, we went through one of the most severe bear markets in the history of mining. And Keith felt, in October of 2014 that we were at the bottom, and it was a very opportune time to create this new vehicle and take advantage of of the markets. I mean, there were dozens and dozens and dozens of companies that had, imploded. They didn't have any cash. Management teams were very demoralized. They were ready to throw in the towel. So for us, it was just a great opportunity to back up the truck and load up on some quality mineral assets.
So what do you see for the future of the gold mining stock market?
Yeah, I think we're in the beginnings of a new bull market for a number of reasons. Obviously, people talk about the political situation in the United States, the new leadership there. That has ramifications, with regards to the policy of the new president, specifically, his relationship with China, whether the United States, declares China a currency manipulator. Obviously, the relationship with the what's going on in the Middle East and the relationship with Mexico. Obviously, the U.S., fiscal situation is disconcerting. Massive amounts of debt, not just federal debt, but you look at credit card debt, student debt. You look at some of the states with massive unfunded pension liabilities, Illinois being a prime example. But even just looking past the United States, there's a number of severe headwinds coming along for the global economy. I spent a lot of time in Europe, and I talked to a lot of people in the finance industry in Europe, and there's a lot of things going on in Europe right now. Specifically, we have an election in Italy, elections in France, Germany, and in the Netherlands, and you're seeing a pattern very similar to the United States where there's a rise of populist governments, and if we see populist governments emerge in Italy or France or some of these countries, that's going to destabilize the European Union. And as we saw with Brexit, which was very destabilizing, a country like, I think Europe can withstand Brexit, but can they withstand France leaving the euro? Can they withstand Italy leaving the euro? And then on top of that, Europe has some significant fiscal issues as well in terms of, very, very high debt levels, stagnant population growth, and then obviously instability because of what's going on in the Middle East and Syria. Not to mention, what's going on in China, massive amounts of debt, economy that's slowing down. You look at Japan, large amounts of debt, a shrinking population. So I think, globally we're seeing, I think the emergence, unfortunately, of a perfect storm. And I think that's very, very good for gold because a lot of the world's currencies, I think eventually investors are concerned about, the stability of the global currencies and whether they're a true store of value. And as we all know, the number one true store of value always historically for thousands of years has been gold. On top of that, if you just look away from the global macroeconomic story, if you look at simple supply demand fundamentals for gold, I'm a geologist by background. I spent over 10 years looking for gold and metals, and one thing I can state for sure, we are, all the easy mineral deposits have been found, and if you look at gold, there has not been any major discoveries in 5 or 6 years, and if you look at all the major mining companies, they just went through 4 or 5 years of a severe bear market. And during that time, these gold companies were highly leveraged. And so they just spent the last 4 or 5 years trying to fix their balance sheets, trying to slash costs and generate free cash flow. And there's, there's a consequence of that. And specifically, the gold mining companies have not been reinvesting. They haven't been doing any exploration or development or looking for new mines. And all the major global mining companies will start to see their production profiles decline over the next few years. So, the major mining companies are looking for gold. And so, in terms of in terms of global supply, we're going to start to see next few years the global supply of gold start to become curtailed, and that's very, very good for gold fundamentals.
Now, I was wondering if you could touch back on why the expansion of debt around the world is bullish for gold. I know you explained this a little bit, but if you could maybe expand a little bit on that, because that might not be easy for everyone to see the connection there.
Sure, absolutely. What you're going to see is, when some of these countries, their debt continues to balloon, and they're continuing with their massive budget deficits, central banks, in order to curtail this, will drop interest rates, and it's like a panacea where to maintain these massive debt situations, they got to drop interest rates. Also, what we could see, you see countries like Italy and Spain and Portugal, where the debt levels are simply not sustainable, and also Italy, I should throw Italy in there if I haven't already. They can't maintain these debt levels, and you might see some of these debt levels, these obligations, they might default on them, and that'll result in the currencies of these countries being devalued, or even the euro being devalued, or countries leaving the euro and forming their own currencies. So this is going to have a tremendous impact on global security, on global currencies. And so, if you're a saver and you got all your money in currencies, you could see all your wealth quickly be eroded. So how do you protect yourself from that? How do you protect yourself from these fiat currencies that are really artificial? They're propped up by these central banks that are, drop interest rates just to protect all these countries that have massive amounts of debt. I liken it to someone who, somehow gets their arm amputated and they're bleeding to death. And in order to deal with it, they give them a shot of morphine to control the pain, but they still haven't controlled the bleeding or the fact they've lost a limb. And I view the actions of these central banks analogous to, governments shooting their economies with morphine, but they're not addressing the deep underlying fundamental issues, the structural issues, such as high levels of debt, an aging population, significant deficits, fiscal deficits by governments, and all these things will erode currencies and erode people's ability to save. And all on top of that, interest rates will continue to be at historically low levels. So how do people make money? You can't put your money in bank and save money and make money on interest because there is no interest. So how do you protect your wealth? And as I said, probably one of the time tested and ways is to put your money into gold. And so we'll start seeing, you're seeing more inflows of investors moving into the ETFs, into equities, into bullion, coins, and other ways to protect their wealth. And as we move forward and this world becomes more unstable, we're going to see way more demand for precious metals and precious metal equities.
Now, when investing in precious metals, if our viewers are interested in investing in gold and silver equities, what are some of the advantages of equities versus, the physical metal?
That's a great question. When investing in the equities, you're getting a double whammy. You're getting, obviously, the beta lift. Most of the equities, specifically First Mining Finance, we're very leveraged to the price of gold. But the added caveat is, in the case of First Mining, is we bought all these gold assets at very, very low valuations, and like I said before, we had a $20 million program this year where we're going to unlock value. So you're getting the boost of gold prices, but also all this intrinsic value that we're going to unlock and deliver to our shareholders. And so that's the beauty of it. You can also invest in equities of producing gold mining companies that generate earnings and free cash flow as well. But the problem is, often these gold mining companies, sometimes they disappoint in terms of production shortfalls, that sort of thing. So that's the added risk. But we have a broad portfolio of assets, 25 assets in various jurisdictions, various stages. So we're almost like an ETF. if you want to invest in the junior gold sector, you usually got to invest in a basket of equities, because most mining equities are single asset companies. But we have 25 assets at various stages, various jurisdictions, primarily gold. So we have a basket of assets, but only in one company, and managed by, I think one of the strongest teams in industry, led by Mr. Keith Neumeyer, who's founded two billion-dollar companies. And so that's my thesis for why perhaps, investing in equity, specifically First Mining Finance, might be a better alternative to owning physical metal.
Well, Patrick Donnelly, president of First Mining Finance, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Yes, we're going to have lots of news flow going forward, and so please stay tuned. And our website is www.firstminingfinance.com.
Great. Once again, thank you so much for your insights today.
Thanks a lot. I appreciate it.